I first want to tell you, there's a difference between investing and trading. Investing is when you put your money in index funds, you buy and hold long-term. These are things that you're not selling for 5, 10, 20 years at a minimum. Trading is when you're selling on any time frame less than a year. That's short-term capital gains. A lot of people call it day trading. That's buying and selling on the daily. There's a lot of different forms of trading. And so kind of want to tell you my story. It started in 2016. I was working for a company. We got acquired by Microsoft. I had $20,000. I was like, I want to put this somewhere. I didn't have enough money to buy real estate. So my dad was familiar with the stock market. So that's where I went. I was interested in investing in gold. That kind of caught my attention. I was worried about a potential recession and thought that this would be a good hedge. So the first thing I do is I buy gold ETF and some gold mining stocks. And within the first 6 weeks, I was up 20%. I thought I knew everything. Fast forward 6 months, I lost not only what I initially thought I had gained, but then 50% of what I initially invested. So I turned $20,000 down to $10,000. The reason is because I had, in reality, no idea what I was getting myself into. I'm competing against algorithms, computers that have way more data coming in than I could ever process. And I'm competing against professional traders and investors that know way more than I do. I'm just reading things off of Twitter, off of Reddit, off of all these different investing sites, thinking that I can go and spend an hour or two a day and make money. And that's just not how it works. I was doing this in addition to my day job. I had no idea the difference between a commodity and a stock, like gold versus an individual stock. I had no idea how the US dollar index played into it or the interest rates. There's just a lot of different factors and data that go into how price moves. A lot of people see forex as a gateway into crypto. For me, it was the other way around. I first got into crypto and then found my way into forex. Just a side note, there are a lot of scammers in the forex industry. I would avoid anyone saying that they're going to make you a ton of money in forex. I did what everybody else does when they start out. They get onto Twitter and they find some influencer that tells them that a certain stock or index is going up, and they just follow what this guy says. That is the most surefire way to lose, because they don't tell you all of their moves. They tell you in general, and you think that they're telling you everything, and then before you know it, you're in a losing position and you don't know how to get out. You should learn what the charts are saying and making decisions based on what you know, not based on what somebody else knows. Because we all have different biases, and what really we have differently is we have different risk profiles. We have different time frames. Is this a trade for a day, or is this a trade for a week or a month or a year? Like, what is the goal there? When you can come up with like, this is my thesis as to what is going to happen in the stock based on your analysis, then you will know when you're wrong and you can then get out. Another thing that people do is they get very emotional. They let their emotions play into it, and so then they make really bad decisions because they're operating either out of FOMO, a fear of missing out, or a fear that they're going to lose everything, and so they sell at exactly the wrong time, and they buy in at the wrong time. Again, it's all about having rules that you stick to. When you're sticking to rules, it actually becomes very boring. I actually found myself not liking day trading because it was so rigid that it was less of an art and more of just like, I got to stick by these rules, and that just became boring to me. It's not so much the gambler's high. And so you got to find the way of trading that works for you. So I thought investing in gold, like I mentioned, was a good idea. So then I went super risky and went 3x leverage gold miners ETFs. So I didn't think I'd have enough volatility just buying gold. So then I found GDX was gold miners. GDX wasn't enough. I had to find something more volatile. So I went to junior miners, which were small mining companies. And then that wasn't enough. I had to go to the 3x leverage of junior gold miners, which was JNUG, JNUG. And I lost my shirt because it ended up just tanking. So you have to be ready to lose money. Like, do not pretend or think that you're going to learn how to trade and not lose some amount of money. Looking back, so I started in 2016. It's now been almost 8 years now where I've been trading. I am more of a swing trader. Now, what that means is I like to hold something that's going to be 1, 2, 3, even 6 months, because I know that I'm not going to get it right on the day-to-day. There's too much that I can't predict, but I can see a long-term trend that will probably play out over the next 3 to 6 months. And that is interesting for me to play. When I do that, I'm no longer looking at the 1-hour chart or the 6-hour chart. Those are like the individual candles that are, each candle is 1 or 6 hours. I like to look at the weekly chart. I like to zoom out. On a weekly chart, like there's less things that are going to happen on a day-to-day that are going to mess me up. When you're trying the daily chart, you have to be spot on looking at the charts all day. I do not want to do that. I want to have my job. I want to look at the charts maybe for 30 minutes a day to just make sure that things are going where I want them to. I'm staying away from the hourly, daily charts because I don't want to spend my day looking at charts. If that's what you like to do and you want to be glued to your computer, that's the day trader. You're spending 4 to 6 hours a day looking at charts. Oh, trading bots. I have tried a handful of trading bots. They work until they don't. They work for a time and then things change in the markets and then they don't work. I've never seen anything last longer than maybe 6 months, but at the same time, they made money because the stock, basically Bitcoin bots made money because Bitcoin was going up. And it's hard to know that they would have made any more money had they just not bought and hold. I have a friend right now that has a bot that is working. He says he gets 1% a week from this bot. I don't know how long that's going to last. It's worth maybe experimenting into, but I would not, there's no surefire way to make money forever. People are using AI to create bots to then trade the markets. I am not an expert in bots, but for the most part, they're trained by humans. They're still going to play into emotional highs. You're going to have just as many bots wrong as there are right. And so you're going to hear stories of how bots won, just like you heard investors and traders making a ton of money. There's going to be less involvement of people, but you're still going to get the same win-loss record. The main thing that you have to learn in trading is that you're going to be wrong. You got to cut your losses, but people don't like to be wrong. You can't be successful trading unless you also work on your mindset. It's a mindset game. The people that are successful have figured out that part of it. I would go get coached and work on your mindset, and then you'll find what actually makes sense to you if that's actually what you want to do. I would say invest in yourself first and that education before you then go try to make money trading stocks. I've been in the stock market game for a long time. Everybody makes money for a certain amount of time, but there's a reason why they all eventually get out, and it's because they blew up. 98% of people are going to be better off just investing. If you want to make this a job where you're really committed to it, go spend $5,000 at a minimum for someone from a professional that's going to train you. Like, you're not going to earn money without an initial investment.